on Business Incorporated today. Tunisian government set to freeze civil service wages and hiring for the next 3 years. Zambia Central Bank increases bond auctions by 73%. And tax reforms in Tanzania increases compliance and remittances. Hello and welcome to the program. I'm Ini John Mekwa. Well, we start as usual with market sentiments at major markets in Africa were mixed at intraday. It looks like investors are still trying to make up their minds before taking position in the new year. Nigeria's NGX was negative away from the positive sentiment it closed with at the end of Tuesday's trading. At intraday, it had shed 0.09%, slightly more loss than that of JSE of South Africa, which was down 0.08%. EGX 30 of Egypt was on the flip side, adding more than 0.5% at intraday, while NSE of Kenya closed on a high positive note yesterday. The All-Share Index was up over 1%. Over in the Middle East, investors seem more certain with a display of positive sentiment, except for Abu Dhabi, which shed 0.04%. Others were in the green. Dubai gained almost 0.3% at intraday, while elsewhere in the region, Saudi Arabia gained almost 0.5%. And Qatar was the shining star with almost 2% gain at intraday. Let's go to Europe now. Stocks opened around the flat line today as global markets react to rising U.S. bond yields. The Pan-European Stock 600 index struggled for momentum with most sectors in positive territory, apart from utilities, media, household goods, healthcare, and food and beverages. But we have reports from Berlin with the details. Joining us now. Well, Rob, new highs for European stocks on Tuesday. What can you tell us about this?
Well, after a record-breaking start to the year, European stocks continue to rise on Tuesday. The Pan-European Stocks 600 index had a second consecutive record session, climbing 0.8%. Banking stocks were among the main drivers, in part thanks to the expectation of tighter monetary policy both sides of the Atlantic, which has driven up government bond yields. Europe's travel sector was also one of the big winners from the day. Growing indications that the Omicron variant of coronavirus is not as dangerous as once feared did help shares in airlines in particular. Low-cost carriers Ryanair and Wizz Air both saw big jumps of 9% and 12% respectively in their share prices. British Airways owner IAG even also got a nice big boost. Investors have been clinging to statements like that of French Finance Minister Bruno Le Maire on Tuesday, who said that there was no risk of Omicron paralysing France's economy.
And we've just had sales figures from one of the big German car makers, BMW. How are they looking?
Well, the figures are looking very good. The company sold 2.2 million of its high-end BMW branded cars last year. That's a new record for the Munich-based firm. The company says it's now firmly at the top of the global premium car market and by a wide margin, as it puts it. A big driver of its sales growth last year was electric car sales. The company sold more than 100,000 fully electric vehicles during 2021. It's quite surprising, really, that BMW's managed to achieve record sales figures despite the global semiconductor chip shortage that has been hampering output for a lot of car makers. But during the pandemic, we have seen people willing to spend more on cars with the disposable income that they've built up. BMW also makes Rolls-Royces and Minis, by the way. We'll get sales figures for those in its full report next week.
And still talking about car makers now, there's been a major deal to help European car makers move with the times. What can you tell us about this deal?
Yeah, speaking of semiconductor chips, the US chip maker Qualcomm says it struck a supply deal with Sweden's Volvo and France's Renault, as well as Honda in Japan. The Californian company's perhaps best known for its mobile phone chips, but it's also pushing to partner with car makers working to digitize their production lines. So they're hoping to be at the center of the drive to turn cars into basically computers with wheels. Qualcomm's technology is going to allow firms like Volvo and Renault to offer software updates for vehicles that can happen just over the air rather than having to plug in anywhere. And they'll also be able to sell paid upgrades, which can generate more revenue for the car makers. Qualcomm's Snapdragon cockpit chip is what Volvo's planning to use, and it'll mean drivers of those cars will, for example, be able to use Google Maps hands-free. Qualcomm hasn't said which chip Renault is planning to buy, but the company's announcement at the CES 2022 Consumer Electronics Show that's taking place in Las Vegas is a break from all the negative headlines around the global microchip market.
Well, a little bit of positive there. Thank you so much, Rob, and enjoy the rest of your day. Well, in the midst of high infection rates of COVID-19, travel firms in the UK are asking for the removal of testing rules. Well, Juliana will tell us what informed this and, of course, reactions to that. Hello, Juliana. Good afternoon.
Good afternoon, Innie.
So why would travel firms be asking for the removal of testing rules, saying that it has no real impact?
Yeah, it's an interesting story, really. We know that the travel sector have had a pretty bumpy ride over the past couple of years, but particularly, again, since the discovery of the Omicron variant really hampered their pretty lackluster recovery. So currently, at the moment, if you're travelling into the UK 2 days before you enter the country, you have to take a test. When you get to the country, you have to self-isolate for 2 days until you get a negative result back. And of course, this is costing families, for some families, if you're a large family, it could cost you up to £1,000. And they're asking government ministers to reconsider these tests because we know that there are very, very high infection rates here in the country. I believe yesterday they were just short of 220,000 people testing positive for COVID-19. According to some analysts, 1 in 25 people in the UK have had or currently have COVID-19. So the travel industry just don't think that the regimes that have been put in place are enough to stop COVID spreading, so they don't see why they're bearing the brunt. We are expecting an update from the British government at some point today about testing. The government is back in action. House of Commons will be in action. I believe Prime Minister Questions takes place at 3 o'clock. We're expecting some update on testing, though it may not be the update the travel industry want. It could just essentially be that instead of having to pay for a PCR test, if you believe you have COVID, which can cost up to £100, you could use the lateral flow or the antigen test that previously some had thought wasn't as accurate as the PCR testing. But we're now finding out that lateral flow tests, where you get the results within minutes, could be a verification enough. And of course, we just heard a couple of hours ago that the leader of the opposition, Sir Keir Starmer, has tested positive for COVID-19 once again. So yeah, COVID pretty popular and common here in the UK at the moment, but we'll get an update for travel bosses we're expecting at some point today.
Yeah, well, we'll be looking forward to that. And I really have to say, Juliana, please do stay safe. We really need you out here, so please do stay safe. And the results from Christmas spending is out. Grocery sales tops the list. What other details do you have about this result?
Yeah, some encouraging data released today from Kantar, which is a grocer market analytics firm, revealing that sales at supermarkets were up 8.1% than the pre-pandemic levels, though they were short of 2020 because I know that lots of people were staying at home, consuming so much more because consumer habits had changed. The 23rd of December, just before the big day, was the busiest shopping day. Billions was put in the tills. And quite interestingly, actually, this data from Kantar shows that more people decided to spend in store than they were spending online, which is pretty interesting. Just goes to show that people actually like to maybe feel their turkey rather than risk it with online. Tesco, which is Britain's biggest grocer by market share value, way outperformed its rivals. Even though their sales dipped slightly on last year, they still got a large market share. And this is really interesting data because we know that inflation is running way high above the Bank of England target of 2% in this country at the moment. And this inflation is starting to trickle down. No longer are retailers bearing the brunt of the cost. Things are getting more expensive in the grocery store, but that didn't stop people from spending enough money for Christmas.
And that was the general sentiment at the market intraday.
Pretty good. At early trade, the FTSE got way above that 7,500 mark, which is a benchmark for them. Really good start to the trading year. The FTSE All Share at intraday is up 0.20%. The FTSE 100 is up 0.22%, and the FTSE 250 is up by 0.12%. In the currencies market, the British pound also up on the US dollar by 0.08%, though down on the euro by 0.20%, and down on the Japanese yen by 0.25%.
Thank you so much, Juliana, and do take care of yourself, and please do stay safe.
Thanks, Ine.
So let's move to the U.S. now. Stock futures were slightly lower in early morning trading after the Dow Jones Industrial Average notched a record close the previous day as investors flocked to shares that stand to benefit from an economic recovery. Futures on the blue chip Dow dipped 52 points, S&P 500 futures slipped 0.05, and Nasdaq 100 futures edged 0.30 lower. Well, we have Maria Bird, Channels television correspondent in the United States now to give us details of yesterday's trading.
In 2022, the U.S. stock market has kept up with where it left off in 2021, as the U.S. stock market on Tuesday was a bit mixed. The S&P 500 was down by 0.1%. The Nasdaq fell by 1.3%, but the Dow Jones rose by 0.6%, as it's heavily dependent upon the healthcare and energy industries, which are showing a rise over the past few days. The COVID-19 pandemic has put somewhat of a damper on the U.S. stock market, especially impacted the tech-savvy industries that the Nasdaq is heavily dependent upon. But it's much hope for the future of the U.S., and it looks as if inflation will try to stay steady through the first quarter.
Let's switch to the African continent. Now, the year 2021 in South Africa has begun with hope that the economy will recover after little to no economic activity in 2020. And of course, that was because of the emergence of COVID-19, which brought the world to a standstill. At the beginning of the year, government had started to do away with most of the hard lockdown restrictions, which many believe was a step towards the road back to economic recovery. Unfortunately, COVID pandemic is still a menace with different waves and variants still emerging, bringing about more lockdown restrictions and travel bans, which have caused another bump in the country's economic road to recovery.
Some hard decisions need to be taken by government, some of the structural reform issues that they need to do in the economy, so that despite COVID, despite medium to short to medium term idiosyncrasies that might creep up, that we are together on the same page on the fundamental road we need to take to actually attract investment and grow our economy. And I think that's a critical challenge for the country now. The July incidents had a significant impact on the entire value supply chain of the country. And that was significant for business confidence, investor confidence, and we need to rebuild that confidence by assuring investors that in the event this is tried again, we are ready for it.
Yeah, we certainly wish South Africa a quick road to recovery, especially some of the restrictions, the travel restrictions, especially with the UK and some other countries have been lifted. Well, we'll take a break now. When we come back, we have more stories for you coming from the African continent. To stay with us. This is Business Incorporated on Channels Television. You're welcome back to Business Incorporated on Channels Television. Now, Tanzania may have started recording gains of its tax reform with a record of 11.11 trillion shillings tax collected. The country has also seen increasing compliance among taxpayers during the sixth phased government. The Tanzania Revenue Authority announced that it collected 11.11 trillion during the first half of 2021 in comparison to 9.24 trillion in the corresponding period that was in 2020. That indicates an increase of 1.87 trillion. Now, analysts say promotion of the private sector investments has significantly contributed to the collection of the 2.51 trillion in December last year, which is equivalent to 109% of the targeted 2.29 trillion, despite the devastating effect of COVID-19. To tell us how they did this, we have Samuel Ndandala, Senior Manager, Deloitte Consulting in Dar es Salaam, Tanzania, to give us some details. Hello, Samuel. Good afternoon.
Good afternoon to you. You're doing well. Happy New Year.
Happy New Year to you too. Well, I guess it's safe to say these are effective reforms. So can you give us a bit of details of the reforms that the government embraced to see this positive result?
Yeah, I should say it's quite impressive, especially the December results. In the midst of COVID, you know, you have over 100% collection in terms of the target. I think primarily the success has been driven by the digitization drive. A couple of years ago, most of the filing, the payments, and everything else used to be manual. Right now, everything that relates to tax in Tanzania is digitized. So your filing is now done online, your payments are done online. So if there's a delay, the penalty is automatic. So that has really helped the government to streamline not just the collections, but also the information about the taxpayers and be able to react to the changes that are needed. The other key change was that we've now introduced electronic fiscal receipt and electronic fiscal devices everywhere. So whether you're shopping at the petrol station or you're shopping at a small kiosk in the market, you will be required to get a fiscal invoice. And it is a criminal offense not to get that fiscal invoice. That alone increased VAT, value-added tax collections, by 40% over the last 2 years. So those two areas have been really instrumental in pushing up the revenue collections in Tanzania.
So do we say that this is voluntary, or is it the fear of the punishments that has made, we see an increase in compliance also? Would you say it is the fear of punishment, or people just trust the system more?
I mean, at the end of the day, it's taxes. Nobody wants to, not everybody will want to pay taxes. So there's a mix of coercion and also compliance. But I will say that some years, 2 years ago, we had a massive tax amnesty campaign that allowed taxpayers to come in. Those who were not in the system to pay their taxes declared, they would get an amnesty of interest and penalties. But the revenue authorities strategically used that process to register new taxpayers. And of course, as you digitize, yes, you're going to get an amnesty, one-off amnesty. But once we have that information, it's easy for us to track that information across the years. But another thing that has happened, and I think it's quite instructive, is that the Revenue Authority here in Tanzania has gone on a massive campaign of sensitization and education. They've designated Thursdays, every Thursday of the week, as taxpayer awareness day, where regional managers, district managers would go speak to businesses, individuals, and other institutions and educate them about taxes, the importance of paying the taxes, when they're due, what they should be paying. And this has really helped to galvanize the awareness. So it's a mix of both. And as you will appreciate, the late President John Pombe Magufuli, who died last year, was very aggressive in his revenue collection drive. So there were serious implications to not paying the taxes, but over the time, it has become more of a voluntary process.
So when you talk about, you said mainly it's because of the digitalization of the process. Does Tanzania have the strong enough mechanism, to pursue this? And also when you say people have to do it online, the infrastructure that is needed to sustain this, do you see this being sustained?
Yes, exactly. I mean, so you have two ways of making the taxes. So one is you obviously can pay using your platform. So there's a revenue authority portal that you log in and you register and you do your filing and you pay your taxes. But on the other hand, there are simplified digital but simplified processes where you're using the USSD. So it doesn't have to be a smartphone. What the government will do is it will create a code that you put in your normal phone as if you're making a call. That way you can make all the payments that you need to make. By the way, of course, across the African region, I'm not too familiar with the exact numbers in Nigeria, but certainly in Tanzania and East Africa, there is an explosion of mobile money. You know, we call it M-Pesa. You know, in other countries it's called Easy-Pesa. But a lot of funds transfer from one person to the other through mobile money, and the government has realized that that is a potential. So now you can make payments using mobile money the same way you'd be sending money to a colleague, a friend, a parent, a neighbor. You would pay your taxes that way. So it has really been a mix of not just high tech, you know, apps where you have an app and you get into it and there's a portal. No, it's not just that. Of course, that is available, but for a large population that is not necessarily hooked or linked to the internet, you can use your USSD phone. The normal phone you have that is not internet connected can still be used to make payments to the revenue authority.
All right, Samuel, thank you so much. Very interesting strategies there, and we hope that other countries on the continent will just embrace that. Thank you so much. Enjoy the rest of your day.
Pleasure is mine. Thank you.
Well, staying in Tanzania, Airtel Africa PLC has announced the sale of its telecommunications tower assets in the country to a joint venture containing SBA. The London-based telecommunications and mobile money services company says that the total consideration is $176.1 million, adding that $159 million of the proceeds have been paid already. The company explained that $60 million from the sale will be used to invest in network and sales infrastructure in Tanzania, as well as to reduce group debt. Airtel Africa will continue to develop, maintain, and operate its equipment on the towers on the separate lease arrangement with SBA Communications and Paradigm Infrastructure. SBA Communication is a Florida-based owner and operator of wireless communication infrastructure. Moving over to Tunisia, now our Tunisian government is set to freeze civil service wages and hiring over the next 3 years. That's from 2022 to 2024. The reform program, which the Tunisian government will present to the International Monetary Fund, will include several measures meant to overcome the ongoing crisis. Another major part of the reform is the gradual lifting of subsidies on energy products in a bid to reach real prices by 2026. In addition to increasing in low-voltage electricity prices for the households, development of platform for registration and management of social transfers, as well as targeted subsidization of commodities, beginning from next year. And in Libya, the country topped the Maghreb countries in the consumer inflation rate during the past year, that's 2021, as it hit 21.1% compared to 2.8% the previous year and 0.2% in 2019. According to the International Monetary Fund data, Libya was ranked the 3rd in the Arab world, while globally it came as 11th. Sudan came first in the Arab world with an inflation rate of 194.6%. Yemen came second with 40.7%, Algeria 4th with 6.5%, and Iraq 5th, 6.4%. And that's the much we can take on the program today. Thank you so much for being a part of Business Incorporated. Let's do it again tomorrow. I'm Ini John Mekwa.